Welcome to Biztech's Asian Midday Marketwatch. Our guest today is Jeffrey Halley, Senior Market Analyst, Asia Pacific at Awanda. Now, Jeff, as always, great to have you on the show.
A pleasure.
Now, Jeff, this is the first anniversary of Midday Marketwatch. We started exactly a year ago, and thanks to all our audience and thanks to guests like yourself for making this the product that it is.
Well, I hope that they managed to glean some words of wisdom from me over the past year. It's been an honor to support this channel, Brian. It really has.
Thank you very much. Now, before we get your sagely wisdom, let's take a look at how the cryptocurrency markets are performing and also regional markets. Now, we're going to start with Bitcoin, which is now trading at, and just let me find at 62,551. It is now market capitalization of 1.18 trillion US dollars. Now it's up 0.78%. Ethereum has also been on the charge. It's at 4,212.52. Its market cap is a shade under half a trillion at 496.61. It's been up over the last 24 hours, 1.52%. Looking at regional markets, we've got the Nikkei, which is at 26,126.55. It's up 1.84%. The Shanghai Composite is at 3,612.88. It is up 0.08%. The Hang Seng is at 26,028.94. It's down 0.39%. The ASX 200 is at 7,440.2. It's down 0.01%. The Kospi is at 3,044.82. It is down 0.8%. Now, there's also a flash breaking news that UBS has beaten expectations with a third quarter profit of 2.3 billion. Now, as we continue closer to home, we've got the SGX, which is at 3,195.83. It's down 0.19%. Rounding off the numbers, we've got Bursa Malaysia, which is at 1,584.24. It's down 0.37%. Now, what's your view on how markets have performed this morning, Jeff?
Well, Brian, I think it's been very much a game of two halves. So we've seen excellent results from SK Hynix, which is a semiconductor manufacturer in South Korea. And also the government there has reduced taxes on fuel for the next 6 months as well. And so we've seen an outperformance from South Korea. Same with the Nikkei in Japan and also Taiwan, where obviously they have a very high beta to the global semiconductor situation as well. Those three markets have very closely followed the tech exuberance from the NASDAQ overnight, and that's been very much the way they've been trading of late. The rest of Asia is a bit more cloudy. We've had another property developer in China, Modern Land, default on a US dollar bond payment, and that has cast a cloud over the rest of Asia. We can see, as you mentioned there, that Chinese stock markets are pretty much flat on the day. When you look at the narrower Shanghai 50 component, which contains a lot of the big mega banks, that's down about 0.5%. It's weighing on Singapore, also weighing across Kuala Lumpur and regional Asia as nerves return once again about the state of the China property market and whether we're going to see some financial contagion. And I believe that is also weighing on what would have otherwise been the scene for a very good day in Australia as well. And that's even as US futures have continued rallying. Sorry.
So Jeff, it's really a tale of two stories, isn't it? On one hand, there's almost, to use a widely used term, irrational exuberance on the US side of the equation. And then there's pessimism out of China, which is then wafting through the entire region in terms of concern and how where do you think the real strength lies? Because there's also a school of thought that is coming out now more regularly that the markets have underpriced the challenges in China.
Yeah, I think money talks, and when and buy the dip has worked very well over the last 2 years. And when Chinese shares dip, and it's this huge economy, the second largest in the world, investors just can't help themselves. They want to get back in again. It's such a large market. But for myself, this shared prosperity program that the government's brought in, these ongoing clampdowns, COVID-19, the Delta version is now in China as well, and it hasn't worked out too well for the other COVID zero countries previously when that's arrived. There's a lot of risk points here. I do believe that China stocks have quite a long way still to reprice to the downside, where those risks are balanced out by the low price. I don't think that that process is complete yet, nor do I believe that this shared prosperity process is complete by any means by the Chinese government. Add into that fears of financial contagion and a slowdown in China from the property sector, or starting in the property sector, you can see why ASEAN economies are perhaps a bit more correlated to China, because they export a lot of primary goods to China. It's their biggest market. So it's understandable that that would weigh on those economies as well, or the sentiment there.
Now, Jeff, the other conversation that's dominating, the other topic that dominating conversation is inflation. Now, the transitory narrative of the Fed has kind of given way to, on one other end of the spectrum, Jack Dorsey talking about hyperinflation, and then you have Cathie Wood, who says that prices will likely fall after the holidays. What is your view on inflation debate, and how is this going to impact ASEAN stock markets and economies?
Well, let's just divide that question up a bit. So the transitory versus sticky inflation argument, some of the brightest minds in economics, and I'm not showing myself or Jack Dorsey or either one of those two, are on both sides of this argument. So there's no unified thought on this. Also, it's the definition of transitory. Is transitory 3 months, 6 months, a year? The Fed seems to think it's 2 years. I think that's about half an economic cycle myself. So there's a lot of nebulosity around all of this as well. I believe that prices are going up. There's no doubt we have these supply chain inflationary pressures around the world. Now, part of that is caused by COVID. Monetary policy alone won't sort this out, because this is an input cost inflation. This is not a wage price spiral inflation. There's a lot of different forces at work. Technically, it is positive and it's negative for ASEAN. It's positive for countries such as Malaysia and for Indonesia, who export huge amounts of commodities to countries such as China, and they will benefit from those rising prices. On the other hand, it will cause imported inflation to many countries in ASEAN as well, through price rises for manufactured goods. And perhaps countries such as Singapore are a bit more vulnerable to that. And that's why we saw the MAS slightly tighten monetary policy recently. I think what we're going to have to get used to, though, is paying more for services and goods that we once took for granted. And that's going to be the reality of life. I think in this environment, staples such as food, electricity, water will outperform in this environment over the next few quarters, because those are the things that we have to use every day in our lives, no matter what's going on in the world.
Now, Jeff, looking ahead, not only for this week in terms of data points and key events, next week, obviously, there's the big FOMC meeting that investors are looking for. But what should we be looking out for now ahead that will move markets?
Well, I think it's all going to be driven by earnings in the US, to be honest. And the sentiment there has been dragging the rest of the world with it. And let's face it, earnings have been fantastic so far from the United States. We've got over 1,000 companies this week putting out earnings. So we're at peak earnings this week. We've got some real heavyweights today. We've got Apple, we've got Alphabet, we've got Microsoft coming up, and we've got Twitter as well. I'm expecting great results out of all of those companies, perhaps except for Twitter, and I think that will keep the music playing, and we should be in a reasonably bullish environment for equities this week, depending on how that stuff develops in China over the course of this week. Evergrande does have another payment to make on the 29th, so that might get interesting if they don't do that. Otherwise, it's all going to come back to the FOMC next week, the start of the taper. I don't think markets have priced that in, and I do believe that the equity market rally could run out of steam after that reality sinks in next week, and we could see a return to the US dollar rally.
Now, Jeff, as always, thank you very much for coming on the show and for your insights.
My pleasure. Have a great day, everybody.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific from Rwanda on Biztech Asian Midday Marketwatch. I'm Brian Fernandez. This video will be on our various social media platforms as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.